And the big distributors who have obligations to make large purchases from these distributors have let go of their inventory and have brought in a whole bunch of 2023 stuff. And as a result, a softer market, new stuff coming in for 2023. Honestly, it's shocking to me how fast and furious the premiums have come down.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and Happy New Year to everyone. Hope your year is off to a great start, and quite honored and fortunate to be joined to start off our first show of the new year with Andy Schectman of Miles Franklin, as he is now joining us every Tuesday to give us an update on what is happening with premiums, products, supply chains, and everything else going on the physical silver level. So Andy, it's good to have you back. Happy New Year to you, my friend. And how are you doing today?
Great to be back, buddy. Great to see you. Happy New Year to you and yours as well. Crazy that it's already 2023, but as always, I'm psyched to be here and looking forward to see what this crazy year throws at us. I think it's going to be an interesting year.
Well, especially we seem to have the Fed rate hikes, at least the end of them. You can see the end of the tunnel. And I think, my own opinion, that's had something to do with the rebound in the price we saw at the end of 2022. And also fascinating, we're almost at the 2-year anniversary of Silver Squeeze, if you can believe that. So interesting 2 years that we've seen in terms of really a new era of silver premiums, and perhaps, especially with Wall Street silver, just overall interest in silver. Although with all of that said, as we start off 2023, anything of note in terms of the premiums that has been happening recently? I'm sure last week was a little bit of a slow week, but could you catch us up to speed on how things are starting off the year premium-wise?
Yeah, it's interesting because last week it was the highest weekly close for silver in 8 months and up $6 from its October low or September low. So the performance of silver has been extraordinary. And yet, as we talked about, and it's been very strange, I'll admit it's caught me off guard. The premiums have come down. The premiums have come down, and I try and figure out why. And there are only two things that come to my mind. One, people are out traveling. People aren't thinking about pandemics. People are out seeing family. They're doing things for the first time in a few years, unwinding. And this coincided almost exactly with Thanksgiving. And then at right around the exact same time, typically it's right around Thanksgiving, the 6 sovereign mints start to release their allocations. And the big distributors who have obligations to make large purchases from these distributors have let go of their inventory and have brought in a whole bunch of 2023 stuff. And as a result, a softer market, new stuff coming in for 2023. Honestly, it's shocking to me how fast and furious the premiums have come down. And for companies like mine, it's kind of perilous in the respect that we were buying things in October and November that had 8 and 12-week lead times at really high premiums that are just now coming in, that I am selling to the public for, less than I had paid for it. So that's what happens in this industry when you have premium volatility. It's not just the consumer who has to deal with the ups and the downs, and I paid higher, and now it's us too. And here again, 0.5% allocation in the entire United States in terms of portfolio allocation to precious metals. And that will change. That will change as the markets start to feel the pressure of higher interest rates. And I think that you will see an awakening to the public moving to, even a very small portion of it, moving to gold and silver, and bang, we're right back where we were the last 3 years, dwindling supply, higher premiums. For those people listening, honestly, it's the best premium I've seen since pretty much March of 2020. And it really caught everyone in this industry, everybody, completely off guard. How long it lasts, I guess that's up for only the future to tell us.
Yeah, and in addition to the premiums coming down, you said that it seems like people are out doing other things. Was there also an actual slowing in the sales volume as well?
Yes, not just Miles Franklin. I mean, I talked to other competitors of mine who are friends outside of business and to the big wholesalers, and It's interesting. They all said the same thing. It's like someone just turned off the light switch, bang, just like that. And that's the only thing that makes sense to me. I know I think of it personally. I look at this holiday season as very different from the last two, and having family stay with us, and it's different. And maybe that has permeated after being bundled up and locked up, caged up for the last couple of years. The ability to go and see your family and to enjoy the holidays in a way that we haven't been able to do in a few years. I think people are out traveling, people are out enjoying whatever it may be, ski trips or on the beach or just being with family and letting go of things like buying precious metals. I mean, it's the only explanation that makes sense when you see the entire industry from pretty much the beginning of Thanksgiving until Christmas just dry up. Now it's starting to ramp up again. Just today and even over the weekend, which was a holiday, we're getting lots and lots of emails and interest that people are starting to focus on 2023. I think people were singularly focused on, what, I'm just going to blow off some steam. I'm going to have cocktails. I'm going to see my family, and damn everything else. Honestly, believe that. That's kind of how I felt, and I guess we'll see. But already today, we're seeing greater demand than we saw in the last month. So yeah, I think that's the case.
Yeah, and what is January normally like? Has that traditionally been a busy time of the year as people start off their new plans and investment allocations, or how does January typically compare to some of the other time periods?
January is usually a very good month because people start to evaluate what's going to happen this year. And so January is typically one of the stronger months. All the years, I've been doing this for 33 years. I used to play basketball in my younger years, 2 days a week, and at lunchtime. And I remember vividly during the holidays. I mean, I would just go play basketball and not come back. I would go out for long lunch and have a martini, which you never do, nowadays. But the point of it is that my whole career, the month of December has always been a slow time, as typically has July and August, kind of the summer doldrums. A lot of things have been flipped upside down, including the summer is not really so slow anymore. But January forever has been a very busy month as people come back, get reacclimated into the current year, and start to think about, where do I want to be moving forward. So I expect this one to be a fairly significant one. It just seems, on top of all of that so many things are converging all at once, and there's so much going on in the periphery that I think it's waking people up to hey, maybe the road to retirement isn't always just paved with dollars and stocks and mutual funds, considering how weak the market was this year. And so I think we will see some strength here in the first month of the year, and there's great supply, whether it be what was left of 2022 allocations or the new 2023. There's great supply available right now. And I haven't said that in 3 years. I've been very consistent about that. But look, it wasn't just me saying that. Everyone's been saying that. So it's somewhat strange that this anomaly kind of converged all at once. A slowdown in sales and people out and about, and the allocations from the new mints coming in. It's created a great time to buy, where premiums on, for example, like Maple Leafs have come down by as much as $4 from 60 days ago. And that's huge. I mean, that's a huge premium drop. So we're still not where we were prior to 2019 or 2020, but we're closer than we've been in 3 years.
And no shortages or the delays for most of the silver products right now?
I have stuff in stock. I wouldn't say it's abundant, because when I look at the big distributors, they're the same one that I sent you a month or so ago when it showed sold out, sold out, sold out, sold out. This, now they say limited, 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 limited. So I don't think it's going to be a massive inversion of what it has been. I just think it's kind of a sweet spot. So everything is in stock. We have had a chance to catch up on shipping, to load up on inventory, and a lot of the stuff we bought in October and November is now coming in as well. So it's just it's kind of a perfect storm, I guess you will, for the retail buyer who's looking to get product without paying the stupid premiums that we've really seen for almost 3 solid years. And look, I'm a U.S. Mint authorized reseller, one of only 27 in the world. And for 3 years, I've told the public, don't buy Silver Eagles because the premiums are too high. I am very sensitive to the premiums. I've been telling people buy 10-ounce bars, buy kilo bars, buy 100-ounce bars. This is the first time in 3 years where I can actually say buying Krugerrands and Kangaroos and Philharmonics and Maple Leafs is not a dumb idea. It has been for a few years with these high premiums. Right now, they're not only available, but the premiums are realistic. And you don't have this massive spread between bid and ask, because when you're paying these really high premiums, like we were to buy it and then sell it into the public, there has to be a big spread between buy and sell, because just this example is the reason why. If premium's correct, people like me are left holding the bag. All of us retailers are, because you can't hedge premium. You can hedge price exposure to the metal, and that's what we do every day, but to the premium, we can't. So it's either make a decision. Do I buy high premium coins to offer them to the public, or do I just not have any inventory? So of course, we buy the high premium, and we're paying 8 and 12 weeks in advance. We're just now getting stuff in that we were paying $2 higher wholesale than we're selling it to the public for right now retail. So it's a very interesting time. And although it's advantageous for the consumer, I don't see it as being long lasting whatsoever, especially if the markets react the way I believe they ultimately will.
Yeah, and any thoughts on what you think we might see happening in 2023? Obviously, if we do get a pivot, that would certainly drive things in one direction, but any quick forecasts of what you're expecting in this year?
Well, I mean, I was doing a little bit over the last few days, trying to catch up on some research. And one thing that you notice I'm not a huge technical analysis guy, but if you look there's a 50-year time frame. If you look back over the last 50 years, you are seeing a massive cup and handle forming with silver right now. A very bullish, strongly bullish technical pattern that seems we're right on the verge of it taking off. You could also say that it has formed a very strong inverted head and shoulders pattern, with the two lows being in September and October. Very, very bullish in that respect. We could talk about the fact that in 2022, we saw a huge shortfall in mine supply versus demand. And if you take out the almost a tremendous amount of recycling, which is somewhere north of 1 million ounces, that leaves 180 million ounces, I'm sorry, in recycling. That leaves a shortfall in mine supply versus demand of about 400 million ounces. So you're talking a really big shortfall between what's coming out of the ground and what is actually being demanded. If you strip out recycling, you add the recycling back into it, but it gets a little closer to the number that we were being told by the Silver Institute. But I think that you look at supply versus demand. The demand is way greater than the supply, and we are seeing a kind of looks like a new way of things on COMEX, where the commercial banks really are not stepping on the price of silver the way that they used to. And in fact, they've really changed how short they are to very, very, very bullish levels. And I guess one last thing that I would say, that I would throw in there, is that when we talk about a strong dollar, we've seen a dollar that's been ridiculously strong for 2022, thanks to the Fed's tightening or quantitative tightening and raising rates. I think it's important to note just how well the dollar has hung, or the silver has hung in there in the face of a very strong dollar, as it's gone up quite a bit. For a perspective, the last time the dollar was this strong, silver was less than $5 an ounce. So the fact that the dollar is this strong relatively and silver is actually hanging in there at 24 bucks an ounce is very bullish. And I think that when you look at the correlation over the last 2 decades between the US dollar index and the silver futures, it's uncanny. When the dollar rises in value, silver takes a hit. When the dollar falls, silver outperforms. And I think that we are embarking upon, you can already see it's turning over, a period where the dollar may actually come down. And we can expect all commodities, silver in particular, to outperform. One last thing that I would add to that is that you're looking at the lowest level of silver inventory on the London Metals Exchange since they started keeping records, and a massive drawdown in the registered category on the COMEX to 34, 35, 36 million ounces, whatever it is right now. That's about 10 times less than the country of India is importing. Now, I lied. I have one more thing to add to my projection. If you look at the silver to gold ratio, undervalued, silver's undervalued at roughly today about 76 to 1. That means it takes 76 ounces of silver to buy 1 ounce of gold. To put that into perspective, in modern era, we've seen an average of roughly 42 to 1 for the last 150 plus years. And so anytime in history that we've seen silver achieve a ratio of 92 to 1, which we saw just a few weeks ago or a month or two ago, when compared to the price of gold, it started an epic turnaround. And in some cases, it took a few years, in other cases, a few months, but we've seen it 4 times since the year 2000.
Well, will be interesting to see because while a lot of the talk had been about the Fed pivot, which has not come yet, I was reading through the press conference transcript after watching that back in mid-December. Just thought this was interesting. They're talking about the summary for economic projections. Appropriate level of Fed funds rate is 5.1% at the end of next year, which would now be 2023. Although they mentioned the median projection is 4.1% at the end of 2024, 3.1% at the end of 2025, which is still above the median estimate of the longer run values. So again, this was Jerome Powell himself. So I think that's safe to say he's not planning on going full Volcker here. So we shall see. And I guess, you know, from the Austrian school perspective, if you think that the whole thing eventually requires more printed money, then that at least is how I've come to view these things. Anyway, with that said, on the projections, one last question before we wrap up today. I was going through some of my junk silver the other day, and I noticed these are 2 separate coins, one next to each other. Here's our regular quarter, and I noticed this one, which was a little different. And then we take a look at the other side. And obviously, since you're the expert here, and I'm sure maybe some other people have seen this, and what could you tell people about the 2 different quarters we have there?
Yeah, you know, there's even an older quarter than that, which is the Barber quarter, which was minted from the early 1890s to, I don't remember what year that started, maybe 1915 or 16, and that ran for about 15, 20 years. That's the standing Liberty quarter. And oftentimes in bags of junk silver, you'll find coins like that. Now, typically, we're not going to give you a coin like that, not because it's worth more, which it is, because it's older, but because of that condition, which is called a cull, C-U-L-L. And when it's worn, you know, you can feel it and you don't feel any high points on it. When you can't see the lettering and the numbers, that's called a cull. But, you know, that's a quarter that's over 100 years old. And so they're neat, no question about it. Certainly is real. But when you buy those in a nice condition, the premiums will be considerably more than the traditional quarters and dimes that we would see in a bag of pre-65. Super neat, especially in high grade. They can become very, very, very expensive.
All right. Well, I appreciate you shedding some light on that. And I guess as we wrap up, for people who are interested in buying or selling silver, anything on special this week that they may want to look into?
Yeah, so I'm only going to offer this for your listeners only, right? And I'm sure there's some crossover. People will call us, say, "Oh, I saw it," but we're going to offer bags of that in any quantity people want at $5.50 an ounce over the price of silver. Should be as good of a price as anywhere in the country. And out of appreciation for you and your listeners, and look, you know, that item for the last 2 years, pre-65 silver, has been the highest premium item next to Silver Eagles out of anything that we sell. And here again, they've come down as well. And so we do have the ability in stock to deliver those at $5.50 any quantity over the price of silver, it's a great buy. It was double that 2 months ago in terms of premium, 10, 11 bucks an ounce over the price of silver. So if people are looking for the most versatile way of owning silver, it's by far the pre-65. If you look at dimes, there's 715 ounces of silver in $1,000 face value bag. Any way you can divide it. So 10,000 dimes would be a $1,000 face value bag. That's 715 ounces, or 4,000 quarters, or any mix thereof. If you do the math, 14 dimes as an example is almost exactly 1 ounce of pure silver. So in that case, it would be 4 quarters and 4 dimes, same exact thing, almost exactly 1 ounce of pure silver. When you contrast it to like a 1 ounce Buffalo Round or a 1 ounce American Eagle, you have one transaction. God forbid we have to do something like that. Here you have 14 in the case of the dimes, or in the other case of the 4 quarters and 4 dimes, you have 8 transactions. The point of it is you have greater utility, greater versatility. And for people who are looking to have that in their portfolio, it's the best time we've been able to offer it literally in 3 years.
Well, appreciate that. And if folks have questions or want pricing on products, you can email Arcadia at Miles Franklin. And Andy, I thank you again for this week's update. And it's always good to see you and talk some silver and at least find out what is going on with the premiums and availability. So we'll look forward to checking back in with you next week. And again, Happy New Year to you and everybody else out there watching. And we'll see you again soon.
Take care, buddy.